Credit Suisse story is a story of one of Switzerland's most important institutions, one of the most important banking institutions in Europe.
A bank which ignored risks, ignored red flags.
We are in a very challenging situation. We need to address that.
There is a cultural issue at the bank. Good financial result at any price.
It's a tale of scandal after scandal.
But at certain points during this has gotten quite hard to believe.
You have Bulgarian drug smugglers, oligarchs.
General chaos at one of the world's top wealth managers and investment banks.
A bank that used to be a national pride, now trying to recover from that.
S&P Global downgraded Credit Suisse AG.
We have taken very decisive steps.
Discuss about this news event, which is will Credit Suisse go bankrupt? Things haven't been very good for Credit Suisse in the last few years. In the last few days, things have got even worse. It will go bankrupt like Lehman Brothers. Look into the financials, the capital position, the liquidity position, and we will then analyze whether it is likely that Credit Suisse will go bankrupt and a 2008 type crisis is likely to happen. A couple of days back, the senior management of Credit Suisse sent an email to all the employees that the bank had strong capital base and liquidity. You don't get to hear these things from the senior management of a large-scale bank. It indicates something is actually going wrong. And this was then in news. Credit Suisse has been in news for wrong reasons for many years now, and when senior management sends out such an email to employees, it really indicates something is wrong with the bank. And so there were speculations around it, and see the immediate impact. You see a massive drop in the stock price for Credit Suisse. A couple of months back it was touching at 12 Swiss franc. It is now at 4, which normally doesn't happen for such a large bank. So the market does not view this event very nicely, and we will see as to why this is so. Question is whether this is more like the Lehman Brothers in 2008. There are some similarities, obviously, but in many ways it's quite different from the situation in 2008, where the mortgage crisis in 2008 wasn't just about the Lehman Brothers. It was also about a lot of other banks like Fannie Mae and Freddie Mac. A lot of other prominent banks such as JP Morgan and Morgan Stanley, even they were quite heavily impacted. But this is not the case right now. It's just Credit Suisse. Other banks are much better situation, and it's a totally different situation right now. Banks are a lot more regulated these days compared to in 2008. So the price drop for Lehman Brothers in 2007 and 8, trading at $20 at some point, and it went all the down to less than $1. Because of this memo, the Credit Suisse CDS hit a record high. CDS, which is the credit default swap, it's an instrument used to insure or hedge the bank's default on its date. This has gone up. That means what is perceived by the market is that the bank is likely to default in the future. So the prices of the CDS, which is more of an insurance, is actually going up. This has some consequences. It's already resulted in some consequences. Some of the high profile exit has already happened. For example, the Credit Suisse deputy head of Asia Wealth business has already resigned, and it is not a surprise because in the last few years many high profile people, including the CEO himself, has resigned. There was around the CEO that he was spying on some of the senior employees. The controversy with Credit Suisse or other Swiss banks is not new actually. Swiss banking system is quite different from other banking system in the rest of the world. Secrecy is animal in the Swiss banking system is quite unique in any banking firm. Officials were spying on each other. There were lots of lies. Money laundering was happening. Fraudulent activities were taking place within the bank. The bank has incurred a lot of losses because of that. And on Reuters, which says that Credit Suisse investigates report of surveillance on executive, and it's on second executive, so it's not the first one. I think the first one was someone at the top of the wealth management. His name is Iqbal Khan. He was hired from London, and he bought a house right next to the CEO, and the CEO was very happy with that, and he started spying on him and he started spying on other people also. He was so insecure about it. It was found out, and later on the CEO had to resign. News item on CNN that goes like this: Credit Suisse CEO resigns after spying scandals. Credit Suisse had even bigger problems. For instance, suffered a lot of losses with this Greensill financing, and Credit Suisse suffered a huge losses actually this particular deal. And it was later found out that there were fraudulent activities. There were not proper risk management in place. Credit Suisse also suffered a lot of losses with the tech investments with SoftBank, the Japanese venture capital firm, which is very known to invest quite aggressively in startups in the US, in China, in lost half $500 million. So, and later on it was found out that no proper risk management for these transactions. Archegos scandal was very famous actually. It was in news. Credit Suisse lost about $4.5 billion in this particular scandal. This particular fund actually went bankrupt.
Bill Hwang's family office, Archegos Capital. Bill Hwang had made oversized bets on a few stocks using enormous leverage from the so-called prime brokerage businesses of a number of global banks. None of the banks knew quite how much leverage Bill Hwang had. It's actually 160 billion. Lots of banks were caught in this. Morgan Stanley, UBS.
Credit Suisse was left nursing $5.5 billion worth of losses, its biggest trading loss in its entire history. It sent its share price tumbling. Regulators were pouring all over it. Its clients were preparing lawsuits against it.
And this obviously raised all kinds of questions. How the bank's different cogs were fitting together. Bill Hwang had strong relationships with some of the bank's top executives from Asia through to the UK. Credit Suisse was really bending over backwards to please him, to give him more leverage through its investment bank in order to run more of his money.
A credit loss of such a magnitude to a single party highlights indeed deficiencies in risk management.
Into the details about the financial in the recent years and how things have evolved in the profit and loss statement for Credit Suisse. There's some good news also, but we'll also see the bad news. You see that net income has been decreasing for the last few years, right? The numbers here in 2019, it was 7 billion franc, got down to 5 billion, 5.9 billion, and it's now 5.8 in 2021. Loss to shareholders of Swiss franc 1.6 billion. And as of end of 2021, the CET1 ratio was 14.4%. So CET1 ratio is loosely speaking about the capital position of the bank. How is 14.4% of the total exposure, right? Which is actually quite good, if not great, because many other banks do not have that kind of ratio. So capital position is still quite decent for Credit Suisse. Although you see the net revenue is actually going down, the provision for credit losses is going up. It was 324 million in 2019. In 2020, it is 1 billion, whereas in 2021 is 4 billion. So from 2019 to 2021, the provision for credit losses, that means, which is not a good thing, by the way, for a bank. That means the bank is expecting a lot of losses, because of which it has taken in more provision. It has increased by more than 10 times in the last 2 years. So that is very, very bad. So do a bit of a comparison with the competitors' bank of equal size, one being the UBS, which is a competitor bank in the Switzerland. We have Deutsche Bank, DB, in Germany. And you see that the capital position for Credit Suisse is actually not that bad, right? It is right now around 14, and for UBS it is 14.5. With Deutsche Bank it is actually 13. So from a capital point of view, Credit Suisse is in a better position than even Deutsche Bank. Deutsche Bank was in trouble actually a couple of years back. There was similar news about Deutsche Bank. It is likely that things in Credit Suisse also become normal in due course of time. The bottom line here is that from a capital point of view, Credit Suisse is doing fine, if not very well, and thanks to the regulations that have come up in the last decade or so after the financial crisis of 2008, where banks are now way more regulated than they used to be before the financial crisis of 2008. Especially the big banks are quite heavily regulated these days. Deutsche Bank, I think, that was in a similar situation. It had to sell 1 billion of its shipping debt to boost its capital position. This news was back in 2016. So about 6-7 years back, this happened with Deutsche Bank. But Deutsche Bank managed to recover from it. It is in a stable position. So we can be hopeful that Credit Suisse also will be able to manage the situation. We'll try to dive into a bit more details about the more recent financials. And you see here that the total revenue actually has plummeted quite drastically in the last 3 years. It was 20 billion in 2019, whereas 15 billion 2021. So that's a decrease of more than 30%. It's massive for any bank actually. You can expect the profit to go down, the provision to go up, but for your revenue to go down is actually a red flag. It says that the bank is doing very badly. Few more key metrics. For example, the net revenue for the recent quarters. We'd like to know actually what is happening in 2022, right? Are things better? In 2021, it wasn't quite good, as we saw in the previous slide. But in 2022, it's also not quite great. You see the net revenue is worse than even 2021. This is a comparison here. The net revenue for the last quarter for 2021, it was 5 billion. In the first quarter of 2020, it was about 4.5 billion. Now in second quarter of 2022, it is about 3.6 billion, right? So it's gradually decreasing over these last 3 quarters. This is about the ratings, the credit rating for Credit Suisse and how it has evolved over time, in the last 15 years or so, from 2007, which is when the financial crisis happened, to 2022. So in the last 15 years, the credit rating by the top 3 credit rating companies, Standard & Poor's, Fitch and Moody's, you see that there is a downward trend. At some point in 2007, the credit rating for Credit Suisse Group was actually quite good. It was A+ by S&P, AA- by Fitch and AA by Moody's. Things have changed quite dramatically in the last 15 years. Now it is BBB and Baa2. What it means is that there is a negative outlook for the bank. It's so bad. Most of the good banks and top banks either have BB+ or in the age. So that is quite alarming actually, that there is a negative outlook and the credit rating is so bad at the moment. And you see the downward trend here and it's quite alarming. Having said that, some good points also, and why I think that this is not going to be like the 2008, and Credit Suisse is less likely to default like Lehman Brothers did in 2008 for a variety of reasons. Actually, it was a very different time then. Banks were much less regulated back then. Capital position was very poor for many banks in the US at that time. And certainly the Lehman Brothers, Credit Suisse is in a different situation. The business is very bad, financials are very bad. The bank is not going to make money in the next few years maybe, but the capital position is good. That means the chances of the bank becoming insolvent is very less likely. Liquidity coverage ratio, which is the portion of the cash and other asset that can be quickly accessed in a crisis, is perhaps among the best among the top banks, which is about 191%, which is amazing for a large bank such as Credit Suisse. So the conclusion here is that Credit Suisse may fail, although the chances are very low, but 2008 type crisis is very, very unlikely, given the fact that banks, especially the big banks, are super hyper regulated these days by the regulators, local regulators as well as internationally